Hi, everybody. It's good to be back here again. I'm an associate professor in the Ag Econ department and the Flintstone Agricultural Policy Chair. I always really enjoy presenting to you all. A lot of my research and extension is at the intersection of policy and finance. Today, I'm going to be giving a farm bill and ag policy update. So right now, we don't have a lot of concrete changes to the farm bill or ag policy. So I'm going to be talking more about high-level trends. We'll touch on the potential government shutdown a little bit as well. I'm also tethered to the table by the microphone, so I'm not going to be working the room, but you can see y'all okay. So most of the time, I'm going to be giving an update on the Farm Bill. I think that's going to take most of the time, and issues related to the Farm Bill. If we have time, I could also give an update related to crop insurance policies related to sustainability, and we could talk about labor as well. First of all, the Farm Bill. What is a Farm Bill? The official language that gets used is that it's an omnibus spending bill. If you don't know what an omnibus is, this is an actual omnibus. It means you put a lot of things together, or it's a very large spending bill. It provides a safety net for people who are hungry or could potentially be hungry, as well as people who produce food. Sometimes it gets called a jobs bill. Because of this and several other programs that are in the Farm Bill, it affects all Americans, or nearly all Americans. One thing, if you've studied farm policy or you see particular aspects of the Farm Bill or how it gets made, it might not make a lot of sense. Because it's so big, because it covers so many things, I don't think there's anybody that likes all parts of the Farm Bill or couldn't think of a way to do things better. But the history is important. We'll cover that briefly. Also, congressional budgeting rules and just the nature of our political system contributes to that as well. And we're going to touch on that a little bit. I think if you add this up, I haven't heard this language, but I think it's fair to say the Farm Bill might be too big to fail. That if you didn't pass the Farm Bill in a somewhat timely fashion, doesn't have to be right away or an extension, it could be very disruptive to the economy and to society. So, you know, I've heard we're not going to be able to keep doing this. Things might end up changing, but sooner or later, they do some extensions, you get a new Farm Bill. So first of all, a question for all of you. Do you remember a particular Farm Bill off the top of your head? It's not a quiz. I just want to know, when you think of a Farm Bill, is there any particular Farm Bill that stands out in your memory? You go, oh, that was a really good Farm Bill, or that was a really bad Farm Bill. Anyone?
Farm 96.
Yep, that's about the only answer I ever get. When I teach ag policy, I say there's two Farm Bills to remember. One is 1949. That's the permanent Farm Bill. If we don't pass an extension or a new Farm Bill in time, we go back to 1949. That was a reform bill at the time. It would take us back to parity pricing. So $20 wheat, $15 corn, something along those lines. Might be nice in the short term, but it could lead to a lot of problems as well. 2014 had some bigger changes, but generally Farm Bills are very incremental. You usually don't see a lot of huge changes in an individual Farm Bill, which is why most of the time a particular Farm Bill doesn't necessarily stand out. If we think about the history of the Farm Bill, in the 1930s, that's when, yep.
I just realized your other mic here.
Okay. Okay, there we go. Oh, wow.
Sorry.
Now I got an echo. So in the 1930s, in the Great Depression, this was the first major Farm Bill. It was about poverty reduction and the Dust Bowl. It's not too different from today. A lot of the Farm Bill is about poverty reduction. Conservation is a big share. That'll get you to 90% of Farm Bill spending today. But World War II, national security is a part of Farm Bill. We added the nutrition programs over the next few decades. We added conservation, rural development programs. A lot of different groups got added to the Farm Bill. In 1996, freedom to farm, the government got out of supply management. The government got out of holding commodities for the most part, but the government didn't get out of agriculture. We'll talk about that more. So what I want to cover mostly today is a couple issues related to the passing a new farm bill. The first is some changes between the 2018 Farm Bill and 2013. I said food versus farm. That's not saying I'm thinking this is necessarily a fight. The two go hand in hand. But there is a current debate about the allocation of Farm Bill funds to nutrition versus farm programs. And a lot of that has to do with the increases in the baseline. So if you look at the 10-year baseline, so that's if you had the Farm Bill and it went for 10 years, the budget in 2018 was 867 billion. Now we're well over $1 trillion. So there was over $500 billion in baseline added to the Farm Bill in those 2 years. And nutrition increased more. We'll talk about that. I'm also going to spend some time talking about a potential base acre update. Seems unlikely to happen, but it has pretty big implications for Kansas, and I think there'll be a reckoning on base acres sooner or later. Last of all, I want to touch on the shutdown a little bit, and then Brian Brigham can continue discussing that in the macroeconomic stuff. So first of all, there's a concept of a baseline for a farm bill. When you write a new one, the Congressional Budget Office makes a budget. So look at what spending would be if you had, based on the past farm bill, going out 10 years. So this is the latest baseline we've had. It'll be 2004 to 2023. Nutrition is about 84%. It was 76% the last time. So everything grew. So we added dollars to nearly all major programs, but nutrition grew more. Nutrition spending, it more than doubled. Farm spending for the major farm programs went up about 22%. So this is causing a bit of a debate because a lot of the reasons for the increase in nutrition have to do with the pandemic and how the USDA changed SNAP funding. But again, everything increased in dollar terms, but nutrition increased more from relative terms. So you get nutrition, that's 84%. Most of the rest, about 15%, crop insurance, Title I, so ARC, PLC, disaster programs, conservation. The rest I call the 1%. There's a lot of programs in here that provide a lot of public goods, and most of them are a very small share of spending. You could even call them rounding errors. So a big one is trade facilitation programs. So promoting U.S. commodities abroad, helping to develop those markets. There's the FSA lending programs, funding for rural governments, rural utilities, infrastructure, other things. Research and extension. So some of the work we do here at K-State. I'm also a Farm Bill stakeholder. The U.S. Forest Service is funded by the Farm Bill. There's also programs related to energy and horticulture. Kay talked earlier, CAMS is funded by the Farm Bill. So there's a lot of programs that you don't necessarily think of, oh, that's Farm Bill funding, but that's how they get funded. So next, SNAP, Supplemental Nutrition Assistance Program, used to be called Food Snaps. It makes up the most of that 84% of Farm Bill spending. So participation in SNAP, data starts in 1969. Participation has been trending upwards. It tends to increase during recessions. So the 2007 recession, the Great Recession, you saw the biggest increase, and participation has never gotten up to that level. In the U.S. today, in the U.S., it's estimated that 82% of people who are eligible for SNAP use it. In Kansas, it's 70%. So there's a lot of reasons for that. But we're at about 40 million right now, and that's not quite everybody that would qualify. What about the benefits? So that's the dollars per month on average for someone that participates in SNAP. And that's gone up to $230 per person. So if you look at the nominal spending, just looks like it's just going up. It's a lot more flat if you take into account inflation. That's either general inflation or inflation for food at home. Those track pretty closely. So it's pretty flat for a long time. Spending went up during the Great Recession. And then it started going down in inflation adjusted terms. And around, I think it was around 2019, 2020, USDA updated their thrifty food plan. So what's the cost of the most cost-effective way of purchasing food for a nutritious diet? And they updated that. So that's how you, so they caught up with inflation and a little bit more. Inflation's not the same thing as purchasing a basket or a healthy food or complete nutrition. But that increased spending quite a bit. And that explains a lot of the increase in the overall budget for the Farm Bill. Yep. Okay.
All of the money.
It's mostly SNAP, so Supplemental Nutrition Assistance Program. I think that gets you up to at least 75%. School lunch programs are the other big ones. There's some programs that support food banks, some programs that support child care centers, or even nursing homes or other group facilities. That's a great question. All right. What does this look like in recent years? Food inflation. I think, a lot of us have seen prices go up at the grocery store in the past few years. So if you look from 2018 to 2022, to about a 20% increase in food prices. Not surprising. What about more recently? What about from 2021 to 2022? It's closer to 10%, and that's just within 2 years. So big increase in food prices. Varies quite a bit depending on the type of food, but it averages out to 10%. So definitely been some inflation in food prices. So to summarize why this is a debate or it hasn't come up, I say this is a debate, but I think in practice, if you figure out the government funding and the shutdown, I think that most legislators can figure this out, but this is kind of the starting point for the debate. So the Congressional Budget Office, they make their budget for the Farm Bill. That's called the baseline. It allocates spending to all these different programs, and that's the budget you have to work with. So if you want to say increase reference prices, so the prices under PLC, price loss coverage, you got to find the budget from somewhere. And nobody wants to give up budget for their program. So yeah, anything that anyone wants to increase, it has to come from that pot of money. Like I said, USDA increased SNAP administratively. That's the executive branch. Congress is saying we should have more of a role in this. Legislative branch should be doing it. So that's part of the debate. Now, to be completely honest, I've seen this sort of discussions about executive branch versus legislative branch from both parties. And I haven't seen too many people that have strong feelings just about the role of Congress or just about the president. It usually aligns with people's general political beliefs. But it comes up quite a bit. So when there's no obvious or easy savings, these are the kind of debates we tend to get. So next, we're going to switch to base acres. Some of you are probably pretty familiar with this, but I'll do a quick review. So base acres are linked to historic production of a specific commodity. So you think program crops is a terminology that gets used: corn, wheat, soybeans. Cotton's a little funny, they're a different situation. But most of the major field crops are row crops that are grown. They might have some base acres. Eligibility for Title I programs, ARC and PLC. You have to have base acres. If you don't have base acres for that specific commodity, you can't select between these programs. The concept of base acres first became a part of Farm Bill in 1985. 1996, freedom to farm. They were called contract acres and they were allocated to specific commodities. At that time, they were based on what a farm had planted between 81 and 85. There have been a couple options, opportunities to update your base acres. So either the commodity or the underlying yields that are attached to those base acres. The yields are used to calculate the payments. It's never been mandatory. So we've had this concept of base acres. It's based on historic production. And in some cases, agriculture or the type of farming attached to those base acres has changed quite a bit. In other cases, not. One last point. Base acres are typically attached to a specific field or a specific tract. Although sometimes you are able to reallocate them within a farm. Somebody has questions on that, I'll ask someone from FSA. What happened? So why do we do base acres in the first place? The short answer is we don't want government cheese again. Anybody familiar with government cheese? So it goes back to Jimmy Carter. During his presidential campaign, he promised a fair price for dairy farmers. So we're going to go back to parity. So milk has the same purchasing power that it had in 1914. If you do that, it raises your prices quite a bit. I don't think anyone expected him to do it, but he kept his promise. Dairy producers responded to high prices. They produced a lot more milk. The best way to make milk into something you can store is to make cheese. And that cheese ended up in caves near Kansas City, and there was a lot of it. Ronald Reagan got into that debate. So basic idea is if you go to crops, you don't want people planting to the farm bill. You want producers to respond to market signals so you don't end up with government policy driving surplus or creating more problems than intended to solve. The formal term is decoupling. And we want to decouple or make planting decisions, production decisions separate from policy. It also helps with the World Trade Organization. We have a total amount of support we're allowed to give to the agriculture sector. If you have base acres, ARC and PLC don't count, so they don't go towards that. So why are we talking about base acres right now? Why did this come up in this farm bill? I think it's mainly the first one. So there's producers, specifically in the Dakotas, corn producers. They're producing corn now. They didn't historically. They don't have any base acres. The term for that, if you read about it, is underbased. Also, potentially a mandatory update of base acres, the way the math works out, causes some savings. So you go back to that baseline, it does create some savings that could potentially go to other programs, maybe for higher reference prices as well. The last point, potentially it could help with more effective risk protection. If your cropping patterns, what you're growing has completely shifted from 3 decades ago, the support that's provided by programs under a mandatory base acre update might provide better risk protection. It's not just acres, though, that affect your payouts under ARC and PLC. There's a lot of different things. So what do you have base in, plus what are you currently planning? If they do a mandatory base acre update, it's probably going to be based on what you've planted in recent years. So that's going to affect your outcomes. The other one is your payment yields. So payments are based on your historic yields. There have been opportunities to update this. In some places, this might not matter, but there's places where yields are trending downwards, and there's places where yields are trending upwards. So you might be better or worse off depending where you're on that. The last one is the likelihood of payouts. So the reference prices for PLC have been set in legislation, so there's some opportunity for them to go up and down a little bit. But historically, some commodities have had higher reference prices. So I think the southern crops typically tend to get more support out of these programs. rice, cotton, peanuts. But also the reference prices for wheat and sorghum have been relatively high. So those crops have seen more payouts under PLC. So if you think of producers in Kansas, there's a lot of producers with wheat base who grow corn. Wheat has had higher payouts in the past 2 years under PLC. So, maybe you'd want corn base because it more closely matches what you're doing. But if you look at least historically, that wheat base has been a little bit more valuable. Questions? So because of the factors, the impacts of this are very different over space and by commodity. So this was the Republican staff on the Senate Ag Committee. They came up with this estimate. The gain or loss under a mandatory base acre update. So how does this pan out across the different states? This is an estimate, but it looks pretty different. So the red states would be expected to lose. So if you look across the Southeast, Texas, California as well. So here, I think, pretty sure this is losing cotton and peanut base, maybe some rice base as well. In California, a lot of land has gone out of program crop or field crop production. Dakotas, they had a lot of commodity production that didn't have base. Kansas comes out ahead on the whole. So looks pretty different across the U.S. So what's the situation for Kansas? We have over 200 million base acres. About half of this is for wheat. But 3 million acres less are planted to wheat than there is base. So that wheat base is either nothing's being produced on, I think largely it's in corn or something else. 21% of base is for corn. We have more corn than there is base acres. Grain sorghum is 16% of base. That's pretty much in line. Last one is soybeans. That is 13% of our base, but we plant a lot more soybeans than we have base. So in Kansas, at least, what we're producing now is not in line with our base acres. There we go. And we're one of the states with the largest number of base acres, over 20 million acres, along with Illinois and Iowa. Our yields are probably a little lower, so that those value of those base acres might be lower. But generally, it's the states in terms of the number of acres in the middle of the country that are affected the most. So what's the change in terms of a net gain or loss? So Kansas, we would add base acres on the whole about 400,000. Some states will lose quite a bit of base acres. So I talked about we have more soybeans planted than there are base in Kansas, and we have less wheat planted than is in base. This lines up with the rest of the country. These are plantings relative to base acres. So a lot more soybeans, a lot less wheat. So pretty consistent with national trends. So who's a winner? This is not a subjective assessment of whether someone's good or bad, but who's going to come out the most ahead? Dakotas, Kansas, and Missouri. And there's a couple different ways. So if you don't have any base acres and you get some, you're going to come out ahead. If you're producing something different, you can gain from the risk reduction. And then there's the income effect. So you might have more valuable base acres that have a higher likelihood or magnitude of expected payouts. The losers, again, not a subjective judgment here, but in dollar amounts, who's expected to lose the most from this? So it's California and a couple southern states, Arkansas, Louisiana, Mississippi, Alabama. And these are producers who are no longer producing a program crop, who are going to lose some of that relatively higher value base. It gets even more interesting if you look at it at the county level and just shows that this is, if this ever ends up happening, it's going to be pretty complicated, and that some folks are going to come out ahead. So that's the blue, and then some folks would lose out. That's the red. So if you see Kansas here, Northwest is blue, eastern half is blue, and the Southwest. And I haven't dug into these numbers yet. If this looks like it's a political reality, I will definitely do that here. That part of the state could potentially lose out. So that might be where they're not even planning base at all. But it wouldn't even look the same for all of Kansas. So if you aggregate all these changes, again, are quite different county by county. If you aggregate them, you come up with a savings, a decrease in the Farm Bill budget of $2 billion over 10 years. And that sounds like a big number, but we're talking about the Farm Bill. So 1.4 trillion. It's not necessarily a large number in terms of a Farm Bill. If you go back to 2014, that was a tough Farm Bill. That took 2 years to get passed. A lot of political drama with that one. And one way they got budget savings for the 2014 Farm Bill was by getting rid of direct payments. And direct payments were $4 to $5 billion a year in savings. And that added up. And that was something they could really work with the Farm Bill. $2 billion over 10 years isn't going to go that far. So what I see happening, I think the aggregate gains are too small, and there's too much of a shakeup in terms of a lot of people are going to lose out and would lobby pretty hard against this. The other point is, if you think about the producers you work with, that the decision between ARC and PLC, it's pretty important. I think it's fair to say it's not their most important management or financial decision. It's probably second or third order to a lot of other decisions they're making, especially in the terms of the dollars they get. They can be important during tough years, but not necessarily a driving force. But I do think this is a longer term issue. Is a base acre a permanent entitlement? If you don't plant a crop for 3 or 4 decades, are you still entitled to participation under that program? So there's some tougher, thorny issues there. You also have to balance this. You don't want to distort markets, but you do want these programs to provide some type of risk protection. So I think this is going to come up sooner or later. Don't necessarily see something happening with this Farm Bill. Next, it seems like we're headed towards a government shutdown. Everything I'm reading says it's highly likely. It seems like every year there's one or several of these cases where you can't fund the government. There's the debt limit and a lot of drama, a lot of back and forth. And at the last minute, they come up with a compromise and they figure it out, and you'd wish you'd ignored the whole debate. But sometimes it doesn't. We've had partial government shutdowns in 2019. There was one in 2013. I was a part of the USDA Economic Research Service at that time. And sometimes I tell people that, and they're like, oh, free vacation, because you did get back pay. And I just remember hating it. We all had research programs. I was calculating the U.S. farm income forecast. I was working on that. We weren't supposed to work during that time at all or check our email. I did cheat a little bit. I wrote a paper. Shame on me. I had to do something. But it was also just a lot of uncertainty day to day. Do we go back tomorrow? When are we going to go back? So we're always waiting for that. So I found it to be pretty frustrating just from a personal perspective. But generally, Congress has to fund the government. So they pass legislation, but then they also have to pass these sort of appropriations or spending bills to fund the government. That's the issue we have right now. From a political perspective, my understanding is that they're pretty unpopular. That there's not necessarily a big political gain from the shutdowns. So typically you see the sort of the leadership, the parties, the mainstream is the right word, but typically you see the like leadership will be against a farm bill because it can cause political damage. But if there's members of Congress that are less affected by that, that's not their driving force, they might still push for it. And that's sort of what you see going on with the Republican Party right now. But I mean, the economic perspective is what I'm more interested in here. There's a lot of consensus that it's not a good, it's a worse time than ever for a government shutdown. We're not in a recession. There's still some recovery from COVID happening. Brian's going to cover that a little bit more next. But the 2018 to 19 shutdown cost $3 billion in permanent lost economic growth. So these are costly. The other issue is that it affects the day-to-day. So some things stay open, so you can get deemed an essential worker, but eventually national parks might close. Other services that people depend on may close. Specifically for agriculture, USDA local offices are fully or partially closed. And I saw Doug here. Are you essential? What the heck? So sometimes some work can get done, but you can't do sign-ups, acre reporting, payments aren't being processed, farm loan applications won't be processed. It plays out a little bit differently, but typically things move slower. Data collection also gets delayed. USDA reports such as the WASDE can be delayed. The EPA can't make rulings. Maybe that's not an issue, but if you need a ruling to do something, it would be. In terms of the Farm Bill, Congressional Budget Office staff and congressional staffers, which do a lot of the day work on the Farm Bill, can't go to work. So it gets pretty disruptive. So one question is, does it actually matter if we get a new Farm Bill soon? Sometimes it takes a while. So this is sort of the length of timeline to the last 4 Farm Bills. So it can take over 2 years. So 2008 and 2014 both took a long time. By the time 2018 came around, I was saying, no, it's not going to happen, but it did. So the 2018 was a pretty smooth going in terms of a Farm Bill, but extensions are pretty common as well. A lot of Farm Bills, the changes are relatively small. And 2 pretty big programs, crop insurance and SNAP, so part of the nutrition programs, those have permanent funding, so they're less affected by the inability to pass the Farm Bill or extend a Farm Bill. So those should keep going in their regular form. There are some risks. First of all, just the broader politics. So, we've been talking about, congressional issues with spending, the looming government shutdown. That's not historically unprecedented. Whatever sort of budget issues are happening, they can a lot of times delay Farm Bills. That was a big one in 2014, back when the Tea Party was having a lot of influence. But generally, there's so many steps for a Farm Bill, just like with congressional appropriation or spending. There's a lot of ways to slow down a Farm Bill. So if somebody wants to, a lot of times you can get it done. The one thing I would say, I talked about the issues with the increases in nutrition spending, potential for mandatory base acre update. I don't think it's going to happen. You never know. But right now, it doesn't seem like, again, once we get past these spending things, there's no proposals that are just going to would completely shut down a Farm Bill or make it take a long time. But 2012 to 14, they tried to separate the nutrition programs from farm programs. That's what I would call a non-starter. That would be nearly impossible to get the votes to pass the Farm Bill if you did something like that. I'm not seeing any of that. But if we do not pass an extension, it would take too long to pass an extension. Permanent Farm Bill is 1949. So goes back to parity pricing. You're looking at, something like $20 wheat, $15 corn, where anybody can make money, at least in the short term. So it could be economically have a lot of unintended consequences. Also, we talked about sort of the 1%. There's a lot of public goods that are funded through the Farm Bill. They're not necessarily a huge part of the Farm Bill, but if they're not funded, it could be pretty disruptive. So right now, I think it's the shutdown of the appropriations is the big issue. Once that gets sorted out, they'll figure out the issues between nutrition and other parts of the Farm Bill. Sometimes the proximity of an election can have a role, but there's two different ways this can work out. A politician might want to deliver a Farm Bill for their constituents. So if they pass a Farm Bill, it looks good for them. The other political calculation is if I think my party is going to do better in the election, I'm going to wait so we have bargaining power and we get the Farm Bill that we like, or more of it that we like. Very few people like all the Farm Bill. So where do I think we're at right now? There's no way we're having a new Farm Bill before September 30th. I'd say maybe some small probability by late 2023 or 24, you could get a new Farm Bill. I'm thinking though an extension is going to be more likely given the environment we're in. So not too many changes. I do think, at least what I call political drama, I think that's what we're seeing right now. It's going to be a very politicized process. I'm not worried right now about anything or any major changes for Kansas farms. Then you always have that catastrophic risk, burn it down. So if you can't pass a Farm Bill, how do you fund all these programs? We know how hard it is for Congress to pass bills, or even fund the programs for bills that they pass. So that's enough. That's always a looming concern. It hasn't happened yet.